big tech companies hoard $1 trillion outside USA. Did you know that just 13 companies own around 40% of the money sitting in the S&P 500? That accounts for a whopping total of $1 trillion. Find out more about one of the world's biggest money reserves, but first make sure you hit the subscribe button and give this video a thumbs up while you're at it. The amounts of cash kept by American businesses has dramatically increased in recent years, rising from $1.6 trillion in 2000 to over $5.8 trillion right now. Investors are wary about this tendency because they would rather see their money used constructively or given back to them in the shape of dividends. The growing significance of rainy day savings, especially for businesses whose values are subjected and who may find it difficult to get capital quickly when the need or opportunity arises, has been a common rationale for the increase in cash holding. Another possibility, though, is a desire to reduce taxes. In order to ascertain how much of the cash hoarding trend might be accounted for by these two opposing theories, researchers conducted a new study. According to their calculations, taxes account for the majority of the increase. According to an Investor's Business Daily analysis of updated data from S&P Global Market Intelligence and MarketSmith, only 13 non-financial companies in the S&P 500 have cash and investments worth more than $1 trillion. These companies are primarily tech giants like Apple, AAPL, Google parent Alphabet GOOGL, and IBD long-term leader Microsoft MSFT. Coming back to dissecting the reason, which is taxes, Mitchell Peterson, a professor of finance at Kellogg, and his co-authors discovered that foreign cash holdings were growing faster than domestic ones. They also discovered that a specific group of American corporations, multinationals, whose wealth is mostly derived from their intellectual property, which is frequently far simpler to move across the world than tangible items for tax-related reasons, is what is fueling the cash hoarding. These businesses, which the research team was able to identify as Alphabet, Apple, and Microsoft, produced 92% of the increase in cash. Given the lengths businesses will go to avoid paying taxes, a recent agreement among 196 countries, which together accounts for 90% of the global economy, to establish a corporate global minimum tax rate of 15%, could have a significant and far-reaching effect on how multinational corporations organize their businesses. Another potential reason for cash hoarding could very much be COVID. While many business and multinational companies had to shut down and lay down their staff and expenses, some tech companies got pretty lucky. Zuckerberg introduced Meta, which skyrocketed in the digital world because everyone during the lockdown had been working and studying online. Facebook Inc. is a different technology stock that ranks among the American businesses with the most cash on hand, Nasdaq FB. Despite having more than $60 billion in cash in hand, Facebook Inc. saw its stock price drop all the way to $140 in March 2020. For a few days, Mr. Market miscalculated Facebook's potential, but after a few weeks, investors changed their minds, and the stock has now returned more than 120% from its March 2020 lows. Unfortunately, Facebook Inc's management failed to utilize its substantial cash reserve and seized the chances. Another example is, of course, Tesla. Elon Musk became the richest man in the world and the highest-earning billionaire in 2020, as well as the richest man in the world for a period, when the company's market cap increased by an incredible amount in 2020. Turning even common stakeholders into millionaires. In reality, the majority of tech companies reported increasing sales and profits as a result of rising demand for technology and an increase in the number of individuals working from home. Another case is Apple Inc., Nasdaq AAPL, one of the American businesses with the largest cash reserves. Nearly $200 billion in cash and marketable securities are held by Apple Inc. One would assume that Apple would have suffered greatly during the crisis, with a huge number of its outlets closed. For the benefits of the Apple Inc. AAPL owners, the business prospered well over the past year, and AAPL shares did even better. Some of the company's financial reserves were used to repurchase shares and continue to pay dividends. Apple Inc. ought to have snatched up some cheap EV and battery businesses with its vast cash reserves. The majority of the 13 companies on our list of the biggest cash reserves in America are tech firms, but non-tech stocks like Costco, Nasdaq Cost, JPMorgan Chase, NYSE JPM, and Hoard, NYSEF, are also listed. Costco benefited from the 2020 coronavirus epidemic, but despite having plenty of cash in hand, JPMorgan Chase and Hoard shares saw significant losses. It makes a reasonable discourse that the tech firms would have a sizable cash reserve. These companies typically have a large amount of excess cash on hand due to the high value of their shares and the fact that their products are typically highly priced with huge margins. There are numerous reasons why businesses would choose to maintain sizable cash reserves. For starters, having cash on hand may be very helpful when navigating uncertainty, which the global economy has recently faced frequently. Additionally, having cash on hand makes it simpler for businesses to fund new ventures upfront, or at the very least, get favorable deals from creditors and investors. This is especially crucial for IP-driven businesses, whose values are more prone to subjectivity, which can make the loan application process more challenging. These businesses also frequently have high R&D costs and would rather take quick, covert action on fresh prospects. However, having a lot of excess cash can also be often considered to be a failure on the part of the company, to have the cash simply lying around when it could be put to better use, say on investing activities or to pay off debts, which would allow the company to save significant money on interest payments. Coming to have these companies hoard money outside of the States is interesting all on its own. While we know the basics of how they invest outside of America and how they purchase properties or build other factories outside, these are still intangible investments. Raw cash being hoarded outside the country is a mystery altogether. Here are some foreign and domestic value stats that might take us closer to this mystery. The researchers found that while both domestic and foreign cash holdings increased between 1998 and 2008, the increase in foreign cash was noticeably larger. Multinational firms now own 90% more domestic cash, but 440% more international cash. The researchers also saw a significant shift in the foreign nations where the corporations kept their wealth. In 1998, a considerable portion of the cash was kept in developed economies like the UK, Germany, and Canada, and the total amount was roughly equal to the percentage of sales that originated in such countries. However, by 2008, things had completely changed. A disproportionate amount of the money was now being held in smaller economies like Ireland, Bermuda, the Netherlands, Belgium, and Luxembourg. For instance, companies in Ireland had 13.1% of the cash but only produced 4% of the sales, while subsidiaries in Luxembourg owned 5.5% of the cash but only produced 0.5% of the overseas sales. Furthermore, it is difficult to put a precise value on intellectual property, unlike raw materials or other commodities that may be bought on the open market. This means that even when the engineers, product designers, and marketers in charge of developing that software are dispersed throughout various nations, it is frequently simple to increase the prices of the services offered by the foreign company with the lowest tax rate. In order to maximize the profits, a foreign subsidiary in low-tax Ireland might, for example, charge a higher tax subsidiary a very steep rate for its design services. Money managing is a tricky game, especially if it's done in bulk. The companies on the top list are huge risk takers when it comes to money making and storing. The loopholes in the industry are insane. And well, if they need to have their way across something, they can very easily. The hoarded cash in America itself is massive, let alone the one that is constantly being transported outside the borders. Do you know any loopholes that could help us possibly create a new theory out of this? Let us know in the comments below. And make sure you like, subscribe, and share this video.